Well, hello folks, I'm LA Little and this is your daily NeoTA wrap, where we take a look at these markets. We do it from a neoclassical perspective each time, asking ourselves what happened today and what might it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. You can subscribe to it anytime content is pushed. It will come to your mailbox, I believe. Channel's LA Little. As far as what happened today, it was a, well, shall we say a volatile day. We had big range. You know, last night we were talking about that we probably were going to see some sort of a push up and out of here. And that is what happened this morning. It was a gap up. This is yesterday's close. You closed on the low, you gap up, right? You hold almost all day, and then when it gave it up at the end of the day, it was just a free fall into the close. Where do you end up? You end up almost at the lows, just like a few cents away. What is this? 7, it's 0.08 versus 0.01, 7 cents away. So the S&P sitting at the lows, ready to test those lows tomorrow. Now, if you're bullish, this actually is not a bad setup if it holds. In other words, you get under it, get back over it, you have less volume, you finally get some sort of a bottom in that's going to turn. So that's the setup. Whether it plays out that way or not is a different story, right? But essentially the setup is in place here for potentially that under over, and it would be a 2-bar reversal if it happened. If we look elsewhere, NASDAQ. On the NASDAQ, we actually had a push down after a push up. So in other words, you open up higher, right? Pushes right to the top, doesn't quite test the top of that big bar from yesterday. And then end of the day, same thing, just sells off rapidly, fast and furious to the downside. Now the NDX looks a little different. And the NDX actually went over the highs and back under them. So here's the top yesterday, 41.99.79. You get over that top, 42.07, and then you end up closing back up underneath it. Now, that's not a good situation because that says, hey, you got up there to the top, buyers were nowhere to be found, then you flip back around. Over on the Russell, this one actually closes under the lows. And that too is not a good thing. Even though it has less volume, you're under the lows, this thing can push lower. So setup wise, NDX, Russell not giving us very good signals. The others, well, the NASDAQ really not a signal. The S&P is set up potentially to try to get a 2-bar reversal. And you could actually get another 2-bar reversal here as well. In other words, if you come in lighter volume tomorrow, if you can't find new sellers, right, then you could get a reversal in this one as well. So when I was looking at this action today and I was asking myself after the bell, you know, what was really happening out here? One thing we saw was the bonds sell off today, and you would kind of expect that. You had, you know, big volume bar yesterday, a bad doji in that it closed, you know, with a full dark candle. And then today you gap down and you hold down pretty much all day, and it was a big loss. I mean, it was down 1.5%. And so if we look at interest rate sensitive type sectors or stocks, you know, like home construction, for example, you saw volume expand today as compared to yesterday, and price breakdown under multiple swing point lows here, right? You've got a situation here where it looks to me like this market may really be focusing now on what the Fed's going to do, because we're getting closer and closer to September, and the Fed hasn't told us they're not going to do anything. There has been no indication. Here's the real estate sector, same thing, big drop yesterday, continuation drop today. You didn't see this kind of action elsewhere. It was in those interest rate sensitive sectors where you saw it. And in those sectors, it was pretty much across the board. Here's the utilities, same sort of thing, volume expanding on the down days and big wide price spread bars today. This market's worried about overseas, what's being pushed to us overseas, and now it's also worrying about the Fed. If we look at a couple other sectors while we're here, Here's basic materials. They get up, they get over, they get back under. That's a failure to get back over that big range bar. Those usually say, I'm going to try to work lower. You had it in energy. Energy did the same thing. Same thing in the financials, and also true in some of the other sectors. So the two signals that we saw on the indexes, right, with the Russell setting a new low, with the index getting over back under the range bar from yesterday, you saw more of the bad action, so to speak, out of these sectors, and those are negatives as well. Now, if you're looking for positives, that comes from overseas where, some of these markets actually performed reasonably well. For example, the DAX, the CACs, those had nice bounces in Europe. Now, this is coming back in to do a swing point retest, right? A bearish retest regen. It's going to try to regen lower, and it's right at the price point where that would happen if it's going to. If we swing our attention over to China, China had the continuation move last night. Remember, we had two breaks, both here, and then we also had the weekly break taking place on this index. If we bring the weekly over, here you actually have the break taking place off of this swing point low. So, China's in dire straits. Their central bank moves again, cuts rates again, brings down the reserve requirements on the banks and so forth. So they're doing everything they can to stimulate. If the Chinese market doesn't start getting a bounce, people are going to really start to get worried, because the impotence of the central bank is going to become an issue in the eyes and the minds of those who are investing in these markets. Because remember, they specifically targeted this market, intervened in this market, and now you're making new lows. In other words, it didn't work. And when people start to believe that it's not working, they really start to get fearful, because the almighty banks, central banks, are supposed to be able to keep this from happening. So that leaves us with the question of what happens tomorrow, and when I come back we'll talk about that.
At TA Today, we have many services that teach trading to our clients. You can use LA's tools to trade or learn how to trade alongside LA using his neoclassical methodology. To earn these free services with no subscription or charge, go to our homepage, click on either the tools and earn free services, or trade with LA and earn free services. On this page, you can refer a friend. Fill out information about yourself and the friend you are referring, and you will earn up to 3 months of free service with no charge, as long as your friend continues to be a subscriber. So remember, refer one friend and earn up to 3 months of free service with us. The more people you refer that sign up, the more months you earn. If you have any questions, let us know. Thanks from the TA Today team, bringing you tools and ideas to help you trade.
So as I suggested, I think last night, I talked about the fact that when you get these large range bars, like we saw yesterday, right, that becomes a defining bar with respect to a range, right? When you get these wide price spread, heavy volume bars. And typically they tend to act as magnets. They tend to attract bids at the bottom, sells at the tops. Of course, you got to set the bottom, and you never know for sure that wide price spread, heavy volume bar that you got on Monday is really the bar. In other words, you could come in tomorrow and they could really flush this out, get another wide price spread bar with even heavier volume, right? Until you get the final one, and you don't know if that's the final one, you can see and you can compare. For example, if we bring over the weekly chart, we can compare, say, the October low last year with what's happening so far this year. This is on a weekly. We've gone 2 days now. The volumes back there were 248 on this charting, and it's the 182, so you're roughly 60 away. You're doing about 90 a day, so it looks to me like this is going to be a pretty high volume bar, probably to rival this one that we see over here. So, when I look at it from that perspective, What we got Monday was pretty high in volume. On a weekly basis, it's going to be high, but it's not going to be extraordinary. So we could get more of a flush out. So you can't totally dismiss that. For the sake of argument, let's assume the best case. Let's assume that yesterday's big bar was the low or is potentially the low. The argument against it is you're already into this bar. And when you get into a bar, right, you typically try to seek the other side of it. And so on a weekly basis, maybe this is not done. And so, this thing could reach to the bottom. Now, the danger, of course, if it does it, is that these are the swing point lows on the monthly time frame. And a break of those on a monthly time frame would be pretty bad. So we've got volume running pretty heavy this month. Not heavy enough, actually, given where we are in the month. So, if it went down there and tested it and came back, I guess that would be a good test. That price point is 1820. We're sitting at 1870. We've had 50-point days the last 2 days, so I guess 50 points is not out of the question here tomorrow if it really wanted to push that far. That's kind of the worst case scenario, I would think, tomorrow. As you get down here, you're so stretched, that's probably it, and that's probably a pretty good buying spot. That would be kind of the worst case scenario that I could envision. The more likely case is that you get some sort of a test and some sort of a hold off of this unless we really see some damage overseas tonight. In other words, Shanghai just totally falls out of bed again, or maybe Europe really just takes everything away from yesterday and starts making new lows, expanding volume, or some exogenous type event that takes place, because we're already fairly oversold. Even though that's the more probable case, if you're in these markets, you have to protect yourself if you're wrong. And so even if you believe that, and even if you want that to be true, be sure to have some sort of a plan if this thing just totally starts to fall out of bed. Because I've seen it before, and I'm sure you have, where these markets get going and they don't stop at a logical stopping point, right? You can kind of throw all that stuff out. They just get their own momentum and they keep moving. I think the real worst case here is that you come all the way down here and you test this immediately, and that probably, as I said, is probably going to be a good buy if you're in a mindset to buy it when it gets there. That's tonight's show. I'll leave it at that. I suspect you're going to see these markets try to hold and try to bounce, but you're going to have pressure in the morning. Until then, I'll see you next time. Good night.